Thank you very much for being a part of the Market Day Report. Hi, everyone. I'm John Jenkinson, and we really appreciate you joining us here today on RFDTV and Rural Radio 147. Well, the grain markets are just a little bit weaker today, as well as the cattle market. We'll get to all of that here in just a moment. We're going to go through this step by step, and we're going to get analysis from Rich Nelson with Allendale Incorporated. So let's look at the numbers here and get Rich's input on all of this. We start with the corn market, and this is the market that has been weaker yesterday and a little bit today here. December corn right now down 1 1/4 at 337 1/4. July corn is down 1 1/2 at 366 3/4. So Rich Nelson with Allendale Incorporated is on the line with us. I want to stop right here for just a moment, Rich. You know, I've been watching these overnight export sales for quite some time. We had the export inspections yesterday. This export of corn has really gotten quiet despite the prices that we're seeing right now in the United States.
It certainly has. A lot of people have been talking about this corn export picture as being a problem for us on the corn side. You know, we've got this good domestic picture with strong ethanol as well as strong feed residual use, but this corn export problem had been very well recognized. One thing which the trade is kind of talking about today is this news out of Reuters Newswire suggesting that there had been this confirmed purchase now of 700,000 tons of U.S. corn sold to China. And, of course, these sales would have made over the past few weeks, and this is for first quarter delivery for next year here.
So is this a big number for them at this time of year? Do we still have a ways to go? Because I can't imagine that would completely fill all of their needs.
No, that's exactly the case here. With their new, more or less, policy as far as moving towards a strong ethanol policy and also trying to get the grain in the geographic location where they need it, they are turning to imports in some respect. As far as the numbers right now, the current talk is, you know, we had to have a pretty good price spread between the U.S. and China. By some measures, it is up to actually a record difference. By the measures we watch as far as specific locations, it's not quite a record, but certainly quite wide here, no doubt there.
So the United States corn could be a bargain at this point. What about globally then? Are we still competitive?
And as of the global picture, we are more or less okay in terms of the competition side. Main problem is we do have quite a bit of product out of South America right now. And China probably is not going to be a major corn importer for this year specifically. A lot of people hope they'll become one maybe in 2 or 3 years again. So we'll see if this does continue here.
All right, let's look at the soybean numbers then here, and I want to get your thoughts on what we're seeing. Now, last night on the overnight trade, we were about 4 to 5 cents lower starting the day. Here during the day trade, January soybeans down 5 1/2, 9.90 1/2. July soybeans down 5 1/2 at 10.20. Let's go on over to the wheat market. July Chicago wheat down 3 cents, 4.52 1/2. July Kansas City wheat down 1 1/4 at 4.55 1/4. July Minneapolis wheat down 8 cents at 6.29. And quickly checking the cotton market here. Right now, nearby cotton up 116 at 73.31. Backing up to the soybeans here, Rich. 5 cents lower last night, 5 cents lower today. And here again, when we talk exports, we still have a lot to sell to the other countries.
That sure is right. And as we all need a reminder here, USDA is expecting a record soybean export this year. As it stands, we're quite a bit under last year's pace even, and last year was its own record. So we're doing a mild miss on corn for exports. On soybeans, it certainly is a very clear miss. And as we get towards the South American weather situation here from December through February, we're now watching this Argentina forecast very closely. Numbers this morning have been updated for the forecast, and they do suggest maybe a little more rain lined up for week number 2 than what was talked about yesterday.
All right. Stay with us because more of the Market Day Report is coming up right after this. Joining us here on the Market Day Report is Rich Nelson with Allendale Incorporated in McHenry, Illinois. Rich, this livestock trade today, kind of interesting to watch. Yesterday, about $1 gains in the cattle market, but today a little bit of loss. But we had a report out earlier that kind of gives us a barometer of how the consumer is feeling so far.
Exactly right. The monthly consumer confidence report from the Conference Board showed some pretty strong numbers this morning. Out at 9 o'clock, we actually saw the numbers increase from last month's, which was revised higher, 126.2. That's an index reading of consumer confidence. Now pushing for November, 129.5. I say this because this is a big deal for us. This is the best consumer confidence since November of 2000. And this type of report has done a lot in certainly helping to explain why these consumers are taking so much of this expansion-based meat supply right now.
Well, going forward, as much as we have right now in the pipeline, in the supply line, we're going to have to continue to maintain that kind of confidence to maintain these kind of price levels. Is that right?
It sure is right. And, keep in mind, we're trading cash cattle prices this week higher than last week, higher than last year at this time, despite the fact our beef output is actually a little bit higher. So this beef export situation is a key issue for us, in addition to this domestic demand as well. So great news, and we are seeing very clear results here right now.
What about the meat industry as a whole here? And we'll talk specifically beef right now because we'll get to pork here in just a moment. But are producers doing a pretty good job of keeping this balance going the way it is between consumer and packer and themselves?
And they certainly have. And one thing which has helped out is people's expectations of this fourth quarter beef supply have been reduced. In fact, we're talking right now here in the office of maybe taking another cut to our December, January estimates as well. So this is very good news. We had been talking about a 5% year-over-year gain for the fourth quarter. Now we're bringing these numbers down to only a 2, if not 3% higher gain. And heck, some people will probably be talking only a 2% higher gain. So strong demand numbers as well as relatively small than expected supply increases helping out the beef side.
Which leads us to, can you talk about this week's hog supply?
And actually, the exact same story is laying out here for the hogs. One thing we've been kind of hyping up these past few days and weeks about is, in fact, this week and next week's hog supply. Normally, these particular weeks, post-Thanksgiving weeks, would be the biggest numbers of the year. On the positive side, this week's number might just only touch the current peak posted 9 weeks ago, 2.528 million head. So on the hog supply, just like beef, we're also having to lower our estimates for future numbers ahead, too.
All right, Rich Nelson with Allendale Incorporated. Thank you very much, Rich. Let's look at the live cattle futures right now and get you up to date on these numbers. We've spent most of the day on the lower side here, and right now it's the December live cattle down 60 at 119.22. February down 87 at 125.18. January feeder cattle down 33 at 154.12. March feeder cattle down 45 at 152.10. And on over to the hog complex, it's December hogs up 88 at 65.40. February hogs up $1.23 at 71.33. And Christina, here in about 15-20 minutes from now, we'll have the cutouts for both beef and pork. And we'll have that information to everyone just here in a little bit.
You'll see if the market reacts today.
Yes, we will.
All right. Thank you so much, Markets Editor John Jenkinson.